Hey, what's going on everyone? Welcome to the Nomad Hedge. So in today's video we're going to go through the S&P 500. We're going to take a look at the VIX, some put call ratios, as well as the treasury bond. If you're new here, consider subscribing to this channel and hit that like button, subscribe if you haven't already. So let's get into it. So in yesterday's session we saw that the S&P 500 and the major indices closed in the red again. So after a couple days of red now, we can see that the put call ratio has been spiking lately, and it closed at 1.17, which could indicate that we could get some reversal in the days ahead, probably most likely on Thursday. I would not be surprised if we could see an update here, because we've been down from almost 4 or 5 days in a row here. So typically when you see the put call ratio closing at 1.15 or above, that's when we can see some reversal here in the major indices. So keep an eye on that. You can see this is a clean breakout here, but if we move on to a weekly chart here of the put and call ratio, we can see this clear trend line here, as well as this higher high, and we do have a potential lower high here. But if we just take a look at this pattern here, obviously we've been in an uptrend here. So we broke above this lower high trend line here. So we could possibly find some resistance here. And what this would suggest is that the higher this thing goes as a contrarian indicator, things could turn into different directions. So if we see a lot of people placing puts, hedging against a downfall, the market sort of like does the opposite. Okay, so we can see a reversal here in the major indices tomorrow, but this is pretty clean here. So one could almost see this as predictive at this point. If we move on here and take a look at the VIX, for instance, again, we saw this spike in volatility here, and this has also been a very clean trend line here. So we've seen some positive divergence here on the VIX. Now I like to trade the VIX on bear markets, and we've hit this previous low level here. So every time, or at least in this bear market, whenever the VIX hits this lower level, that's when we see a spike towards the upside, and we see complete reversal here on the major indices. So complete buy signal here on the MACD, and as we can see here, positive divergence I mentioned earlier. But if we dig deeper a little bit, we can see here that this has also been pretty clean here. So we could possibly find some resistance here on the VIX, suggesting that maybe we could see some reversal here, or some downward reversal here on the VIX on Thursday. If markets end up closing up higher, we could possibly look towards maybe closing this open gap here. We do have a 15-minute intraday gap here, which is pretty huge. So we could possibly maybe find ourselves closing this one. Although this doesn't happen immediately, it happens typically within 90 days. So this is just something to think about, that we left this one open. So obviously we do have to fill these gaps at some point in the future. But now it looks like the VIX have found some short-term resistance here, considering now on Thursday we could close somewhat higher. And we can see here this momentum here towards the downside on the MACD. Things would suggest that on Thursday we could most likely close positive on the major indices. If we move on here to the 10-year treasury yields, we've seen yields dropping quite a lot lately. This is the higher low trend line that I've been talking about in my previous videos, and yes, they've been pretty clean. We've seen now that this has been validated. We have seen a complete breakdown, but we can't ignore the fact that we do have a falling wedge here. And I mean, if we look at this as an Elliott wave pattern, we could look at this as 1, 2, 3, 4, right, and then 5. And then we could see a complete spike here, maybe testing this higher low trend line again before we see a complete breakdown here. And I have a target here at around Fib 0.618 or 2.687. Obviously, I think the midpoint here would be around 3%. This won't happen in an instant, but I'm just thinking long term, considering this huge rising wedge here, that could be a very high possibility. But for now, we have to take a look at this pattern here, this would suggest maybe a test towards this higher low, and then we could see this thing falling back again toward Fib 0.5. Okay, so let's move on here. And here's, by the way, the 10-year. I've just applied some moving averages here, but if you take a look at this line here, this is a 150-day moving average. Now, we have found support here previously. Now, we're seeing this falling wedge here, so it would suggest that maybe we could find some support at this level again. So if we do find a support here, we could see another wave up here, possibly a breakout, and then again test this higher low trend line. Now, if we would would break above this trend line, then we could look toward the 50-day moving average, this green one here. Obviously, if we do test this thing and fall back down, we could see this 200-day moving average be potential support, and then do another leg up and then see if we can find ourselves in the fib 0.5. So that's just something to think about when we look at 10-year. Let's move on here. This is a weekly chart. I know I've been pointing this out earlier, but I like to look at these on a day-to-day basis, see how far we can go. So this is a clean breakdown here, this trend line. Now I suggested that we could possibly see another leg up higher here. For now, it does not seem to be validated. If we look towards how much potential this thing has towards the downside, I mean, look at the RSI, for instance. And again, I pointed out this fib 0.5 level as intermediate term support here at this level, so 3%. And we do also have a complete sell signal here on the MACD, suggesting that this is validated now. So technically, I mean, things are looking validated here when we look at this pattern. It's a rising wedge. So we can just continue to see this thing continue to fall. But now, I mean, the interesting part is we've reached overbought levels on the major indices. I mean, the Dow is breaking down, the S&P is breaking down. Lower yields and a falling dollar would suggest that we could see rallies on the major indices. But we're seeing a little bit of a disconnect now. So, but maybe I think it has to do with the fact that we're so overbought on the major indices. So we need a little bit of a pullback, test some key support levels, and maybe we could see another leg up on the major indices ahead. So that could maybe suggest that we get a Santa Claus rally. I don't know, but that's just something to think about for now. And so we also got the 2-year here. Now the interesting thing about 2-year, we did not see a complete breakdown here, despite this head and shoulders pattern that I've pointed out previously. So the 10-year has broken below that higher low trend line, and but the 2-year is still struggling here to get above this level. Now, if we would break down here, the target here would be 0.5 as well, so we could look at this thing towards around 3.7%. But on a weird note here, we can see a positive divergence here on the MACD. I mean, maybe this could suggest a leg up here, and we also have a positive divergence here on the 2-year. Maybe, I'm just saying maybe, the 10-year could follow as well. So that's just something to keep in mind, that we have to also take a look at the other yields here in the treasury market and see what kind of connect and disconnect we're seeing between these. But again, if this thing would continue to go up higher and the 10-year keeps falling, the inversion would just continue to widening the gap. You know, we would see a huge spread between the two. So yeah, here's a weekly chart of the 2-year. Pretty clean here, this trend line here. Again, we saw a positive divergence here on the MACD, but we're also seeing a negative divergence here on the MACD as well. We're seeing that the yields are falling here on the ADX, suggesting that we could possibly see a breakdown here, as well as the RSI. Long term, this thing looks to be breaking down, but again, don't rule out the possibility for another leg up, just as I pointed out in the daily chart. So keep that in mind. Moving on to the dollar index here. Again, we broke below this higher low trend line as well, but we're looking towards maybe building up a bull flag here. So now we're testing this 2 times here, possibly see another leg up here, and then test this low trend line again before we can see a potential breakout here. And that would obviously coincide with this fib 0.618. We're seeing also a positive divergence here on the RSI, an early buy signal here on the MACD as well. We also have that 200-day moving average that could also be short-term resistance, as well as this previous high. Yeah, I mean, things can just go down in a straight line here. So let's move on now to a weekly chart here. And as you can see here, we do have a potential target here, almost 103, on which also coincide with this fib 0.618 level. So again, would not be a surprise if we see another leg up here before we continue its downward trend. So we do have a complete sell signal here on the MACD, and I've not seen any exhaustion here towards the downside. And the RSI still has some room towards the downside as well. So things are not moving in a one straight line. Again, as I pointed out in the daily chart, if I'm not seeing any exhaustion here towards the downside on the MACD, I'm gonna treat this as a long-term downtrend for the dollar index. And so if we move on to the dollar index here on the monthly chart, I mentioned that we could possibly see another leg up, right? So that happened previously back in 2015, and you can see this double bottom here. We had a breakout, and that was quite bullish for the dollar index again. So we could see some sideways movement here from these levels that we're currently at, and considering that we are just as overbought that we were in 2015, and that the Fed is going to continue to raise interest rates and they're continuing with their quantitative tightening, that could support the dollar. So yes, we've been down here for 2.5 months, but don't rule out the possibilities that we could see some sideways action, possibly a new breakout testing new highs again, and then complete rollover just like we saw here back in 2016, 2017. So let's take a look at the S&P 500, and we broke below this rising wedge here, and we've been down now for almost 5 days in a row. We do have this open gap here, so it's would be good if we would close this gap. Actually, we also broke below this trend line here on the RSI, suggesting that yes, I mean the bias is now towards the downside. You know, this has been validated. Although volume was quite low on Wednesday's session, we're seeing also that the money flow indicator is pointing downward here, and we also have the MACD now on a sell signal. In the intermediate term, we would like to see this thing being closed. Maybe we could find some short-term support here at the Fib 0.5. Worst case scenario, I mean, if we're falling below this Fibonacci 0.618, we're most likely going to test new lows here. That's just something to keep in mind on when it comes to the S&P. And if we apply some moving averages here, we can see this is the 50-day moving average screen line here, coinciding with this open gap as well. So this is going to be critical support here in the short term. And if we fall below this thing, there's nothing that's going to support the S&P towards the downside. So most likely then we're going to test new lows here if we get a complete breakdown here of the 50-day moving average. So if we take a look at the S&P here on the intraday chart, this is a 15-minute chart here, and we do have a potential falling wedge here. Now, I'm looking at this on Thursday, December 8th. Sorry if I said December 6th previously, I think I did that. But right now we saw that it broke above this trend line here yesterday on Wednesday. So it's been sort of like validated because we found resistance here at the previous lows on Wednesday's session. And we've built another falling wedge here. So we need to break above this short-term resistance line here. And then we could possibly see another leg up. As I said previously, I'm looking at the futures market right now and things are looking positive, so we will most likely get another breakout here on Thursday, but this is going to be most likely short term. So technically speaking, I mean, this looks to be breaking out here on Thursday. We just have to see if we may be going to test this higher low trend line before seeing a complete breakdown again. And on a daily chart here on the S&P, I'm always referring to the SPY, by the way, so not the index level, but anyways, they are pretty much the same. So if we look at this thing from on a daily chart, now we can see here that we failed to move above this lower high trend line here, and this has also been acting as previous resistance here. This was a support resistance, and then we broke above this resistance, was resistance here previously as well back in September. So if you look at where we are currently now, this is also a very strong area of demand and support. So that would also suggest that on Thursday we could possibly see another leg up here before breaking down. That's just something to think about. Yeah, I mean, I just wanted to point this out. When we look at defensive sectors here, I'm just going to pull up healthcare, industrials, and utilities. But this also, I just wanted to show you that these sectors are starting to break down now, despite the fact that they've been breaking above some of these, falling wedges or bear flags, downward trending channels, whatever you want to call them. But this suggests, I mean, these are pretty overbought at this point, and looking at these patterns here, we could possibly see these things testing former breakout levels. So I'm just looking towards this on the healthcare sector for now. There's a high possibility we could test this Fibonacci 0.618 level, filling this open gap, and I mean, everything is just pointing towards a breakdown here. So if you take a look at volume, for instance, we're seeing a negative divergence here on the money flow indicator as well as the MACD. Sellers here are getting exhausted here on the ADX, overbought levels here on the RSI. So don't be surprised to see all these sectors been performing so well. I mean, industrials as well. That's why the Dow has been a winner in this latest bear market rally. And so we're testing just the previous highs here. There's a possibility we see another leg up here before breaking down from this pattern. But that's just something to think about when we look at these sectors. And same thing here. I mean, the staples, for instance, we could also see another breakdown here, overbought levels. So we need to see if we can get support here at the 50-day moving average. If not, possibly the 0.618 here. But we also have an open gap here. So there's a high possibility on the staple side side as well that we can test new lows, especially if we're breaking below this 50-day moving average. And again, I mean, if you look at the indicators here, everything is pointing towards a breakdown. So let's move on to the crypto side. This has been interesting here. I like to look at Ethereum because it tells me what the market is going to do, right? So it's like looking at the futures market, but Ethereum moves in a direction that's very interesting. So same thing here. We broke below this trend line here, possibly find some resistance here at $1,164. Huge possibility that we can do that. There's been so much overhead supply here on the Ethereum side. So again, if we look at the indicators here, I mean, we didn't even reach overbought levels here. So things are looking pretty ugly here on the crypto side. And here's a weekly on the Ethereum, and we can see this huge rising wedge here. Now we're still below 2018 highs. If you look at this previous high, we're still below that level. So nothing is bullish on the side of Ethereum until we at least break above this previous high here. So we're still below these levels. And again, on the weekly, you know, we're seeing a positive divergence here. Yes, but again, there's some other indicators here that we have to look at. And things are not looking good until at least we're above this level. So that's just something to think about when it comes to Ethereum. But again, just a quick overview of what happened in markets. And so if you enjoyed the content, consider subscribing, hit that like button, and I'll see you guys in the next video. You can also follow me on Twitter, by the way. I post daily there, so you can absolutely do that. Anyways, thank you so much for watching. I'll see you guys in the next video. Take care for now. Goodbye.